President Erdogan will have a cordial relationship with President Biden. Now, when it comes to the East Mediterranean and specifically these talks that are going to resume today between Turkey and Greece, let's take a step back and remember that these talks have started all the way back in 2002. And after 60 or so attempts, Greece unilaterally pulled out of this in 2016. Now, Turkey has the largest coastline in the Eastern Mediterranean. There's obviously disputes that are not easy to resolve vis-a-vis the maritime rights in the region. But also, Turkey and Greece has much more in common than most people realize. And a part of operating in this region at large does include some element of saber rattling. President Erdogan is well known for his brinkmanship, but I think his staying power can be found in his pragmatism. So yes, there are certain hurdles to get over. Do I think these hurdles are going to be kind of achieved immediately? No. But I do think that all these fears about an open conflict between Greece and Turkey are just not really realistic. So I think President Erdogan will play his cards as he needs to in order to create a right start with his relationship with the new Biden administration.
It's going to be fascinating to watch, isn't it? Ozan, also wanted to tap into your financial market experience here and just get your take on the state of the Turkish economy and currency. Goldman Sachs was out last week with a call on the lira. They say 7 to 7.5 to the dollar over the next 3 months. And they say that further strengthening of the lira here might be constrained by central bank efforts to build FX reserves. Do you agree?
Not entirely. I think the risks on the Turkish lira, if anything, are on the upside, meaning that the Turkish lira is susceptible to devaluation. Now, I avoid trying to give a specific range when it comes to effects, just because we live in an unparalleled world with dynamics that we have not witnessed before. So it's very difficult to predict specifically where the rate will be. But it is fair to say that Turkey has a structural current account deficit, which it will need to finance. And yes, reserves are a very potent tool that the central bank, with the new governor stepping into a more orthodox monetary policy, will want to rebuild. So therefore, even if you were to see a significant amount of foreign direct investment coming into Turkey, which I think in the context of the global pandemic will be not that easy, there will be a floor with the central bank trying to build this reserves back up to maybe $120 billion level. So if anything, I think that the movement will be towards maybe testing the high end of a 7 handle or low 8 handle.
Is Turkey an attractive investment proposition right now?
Well, look, for carry trade, absolutely, right? I mean, again, let's take a step back and just look at what's going on in the world. I mean, we are going through a once-in-a-century pandemic. There is significant amount of liquidity in the market, and therefore yields are low and are kind of forecast to remain low. So therefore, investors will look at places where they can get a yield enhancement. Now, that means Eurobonds, that means FX debt instruments, and Turkey has always been an attractive place for a carry trade. And I do think that in 2021, that trend will continue. Now, whether that means we are going to be able to attract sufficient, what I refer to as a sticky long-term FDI into the country, that's a tougher question to answer, and it will become more clear towards the second half of the year. But for the first half, Turkey remains and will remain to be an attractive carry trade destination.